Welcome to At the Bar for Stock Pulse. I'm Kelly Earle with Skeena Resources, and I'm joined with Brent Cook from Exploration Insights and Mickey Falk, the mercenary geologist. And we are here for Roundup Week, and we're at Nightingale, which is one of my favorite restaurants. So welcome, gentlemen. Thank you for joining me.
I should also say we're here for the Vancouver Resource Investment Conference for the next 2 days. Mm-hmm. And we have a new venue that we're doing this under, a new guy's Stock Pulse. So it's all checked. I still have one.
Yeah, still here.
And amazingly enough, after the downturn of 2016, 2 years ago to the day, metals hit their 6 or 7 year low, and now we have a market with a pulse too.
Which is exciting. So that's what I wanted to talk about today. 2018, it's a brand new year. I want to hear your outlooks for the industry, for commodities. So why don't you start us off, Brent?
I'm actually rather positive.
Oh, wow.
I don't not extremely positive, but I think it's going to be a lot like this year. But we're starting to see more money coming into the sector. I think the larger sector, the political situation, all that sort of stuff, is in for like a shipwreck. Can you get that? But no, I think really it's going to be a good year for legitimate junior exploration companies that have the potential of a discovery. We're seeing the major mining companies starting to put a lot of money into the sector. That tells us they recognize they need new deposits. And so I think we're going to see discoveries being acquired early on. So in that respect, it's going to be a good year. I'm positive in that respect.
Good. And you?
Pretty positive.
Wow.
Well, call it like I see it, and here's what I see. We started from the low I just mentioned, and metal prices have gone in fits and starts, but generally up. 2 years ago, we were looking at a copper price of $1.96 and a gold price of $1,100 and change. Now we're $200 above that in gold, and copper is now at a legitimate price. It's kind of stabilized in the 320 range right now, I think, in its next step up. But what we've really seen is this kind of stepwise rise in most commodities. Zinc is at a 10-year high, lead's at a 7-year high, copper's lagged, and that's one of the most important metals. And so oil and gas, all of a sudden we've got an oil and gas market, $64 oil again, and a supply deficit balancing in that oil market. And that combined, and my focus really has been on the Western U.S., combined with the Trump administration's rollback of regs and bureaucracies, it all looks go to me over the next year.
Okay, so you're stoked on commodities, it sounds like, and you mentioned about more money coming back into the industry. What about, I've heard some stats that there's actually a lot of money leaving the junior mining space for weed stocks or Bitcoin or things like that.
I think that happened, that's so 2 weeks ago.
I agree with you.
Yeah, you're right. That has taken some of the retail speculative money out of the sector.
Absolutely.
But on the other side, we're seeing outflows from the gold ETF, and that money's coming into the top end, the big mining companies. But that money's starting to come in. And what this reminds me of, see what you think, is the 97 bust, 2000 picked up, 2001 a little bit, and then we had the lag. And we just, I think, went through the lag again, and it may start up as well. Because what happened, we had all the people who just lost everything and were just anxious to sell at any price just to get out of this crap.
Yeah.
And now we've seen that. But as Nikki mentioned, the metal prices are doing well. So we may be about to take off like we did in 2003?
2003. So we had that bear market. You're much too young to remember, but Brent and I certainly remember it. That bear market lasted from 97 to 2003, 6 years.
But 2000 picked up and then it slacked off a bit.
Yeah, no, and it even picked up in 2002. I was in Peru in 2002, and we thought we had a market. Gold price dips, and it all went away, but it came roaring back in 2003 and especially 2004. There's a reason I'm wearing a gold tie today, and it's because I am really so bullish on gold going forward. What we've really seen, I think, is with the weed, crypto, lithium plays, which I would argue are all bubbles. They've all kind of gone exponential, and when stocks go exponential, they will go parabolic down on the other side. So over the last, you've seen in the index since the first of the year, this big rise. It's dropped off a bit, but that's the weed, the crypto, and the lithium stocks, and that's hungry money and itchy money, if you will, that needs to go someplace. And I'm very hopeful that it'll pour into the metals sector.
So one of the things we mentioned that we would like to discuss was bubbles. We see a lot of bubbles in our industry, whether it be commodity bubbles or flashy words or jurisdictions. And I work in the Golden Triangle with Skeena, and there have been some stocks that are going to, some bubbles that are going to burst, I think. So I wanted to get your feedback on that and how investors can avoid these bubbles, or things to look for, what they shouldn't be investing into.
Go ahead, Mickey.
Mickey?
I think you got to be very cautious about buying news on high-graded grab samples,
Yes.
which essentially means some geologist or prospector has gone in and selectively sampled visible gold, or a grab sample means basically you knock off a rock and throw it in a bag. It's not represented. And there's been some stocks that have flown out the window on
Yes.
these sort of, a couple in the Golden Triangle,
Yep.
and they go from a few pennies to multi-dollars, and they do some drilling, and they hold out their drill results till they complete their financing.
Yes.
They announce their drill results, and the stock goes to 30 cents. So I would be very cautious about buying any of those things on the way up like that.
But a lot
It's all about context, really.
Yes.
I mean, nothing wrong with a grab sample. When we got there, we're looking at, is there any gold at all in this system? And so we'll take the best looking rocks. I mean, that's what a grab sample is. You come in and do a soil sample program, and you go, okay, now I'm outlining something. But it's all about context. You've got to have the context of what those results really mean. And a lot of these companies are not providing that context. They're not providing the maps, they're not providing the sections, they're not providing the detail. A lot of times they're leaving out drill holes, only releasing certain drill holes. And that's bullshit. It's not helping anyone at all. So I think it's all about context. You've got to have the geologic context. What's the target? What are they looking for? Does this make sense? And that should be all available to anyone on the internet. And if it's not, that's a red flag.
So I'll be the devil's advocate and say the average retail investor can't evaluate that context.
That's true.
So that's a little bit of promotion for newsletter writers who are honest and write what they think and try to pick good companies with a concept. And it probably helps if those newsletter writers are geologists. Hey, Brent.
I would agree with that, yes.
Definitely.
So that's a bit of promotion for both of our business, because to my knowledge, we remain the only practicing field geologists with a significant number of years in the field that write newsletters. A couple other guys in the business have geology degrees, but they never really practice the science.
It's
Or
amazing.
the art of geology.
Well, it's amazing what you learn, we spent years out in the field sampling rocks, sampling soil samples. Just to understand what a soil sample really consists of is pretty damn important,
Yes.
because you can see the issues and that sort of thing. I mean, you've seen that as well.
Definitely. So are there any companies or anything you'd avoid right now, or any, flash words? What are the ones that I've seen lately that I didn't understand?
3 things to avoid in 2018. My
Okay.
3 things:
Sure.
lithium, weed, and cryptos, because those are all bubbles that are,
Yep.
in my opinion, on their way down.
I would agree with the second two. I think lithium, you want to be really careful what
Yes.
you own. It's got to be a known end product and a deposit that you know everything about, and is something that is either
the cartel will take out.
that someone else needs and is going to buy. But to go out and stake a salar in Mexico is silly.
Okay.
There's no shortage of lithium, but there is a shortage of viable, ready-to-produce lithium deposits, and that's what you want.
Yep.
But exploration, no. It's like, and you may disagree, but in my view, uranium's the same way. We've
Well,
got
I
10
think
tons-
uranium is a much longer view. So
Agreed.
being a contrarian, I will not disagree with you on uranium. Ultimately, uranium is going to have its day, and I can't tell you when that's going to be. But as a contrarian, I have long-term holdings in uranium space that as the industry continues to muck about, I will continually add positions on weakness. But when that's going to happen, I don't really know. I have probably a mid to long-term view of the uranium business.
I'm not that positive on the long term of it either. I think it's not as bad as coal, which is a dying industry, but uranium I think is on its way out as well. They're just the capex to build and printing time to build a new uranium.
Small modular reactors. is
Yeah,
the
those are
future.
interesting, possibly.
So
but
I
still,
probably have a longer term view.
yeah. But
You know, Saudi Arabia announced last week 16 new reactor builds in
Really?
Saudi Arabia. Yep, 16. Wow. Anyway,
Okay. Well, I think that's about all the time we have for At the Bar with Stock Pulse. Thank you very much, gentlemen, for joining me as we get ready for the Vancouver Resource Investment Conference and Roundup Madness, as I like to call it.
and good luck to you all this year.
Cheers.
may all your trades be to the upside.